thank you guys for joining. This is the last panel of our first day of the conference with our second day, March 25th, kicking off the APAC region portion of the summit. Thanks to the attendees that have kind of stuck with us thus far and stayed till the end. I think this last panel will be really interesting. And, we've been fortunate to get some great speakers that are both partners of the firm or, personal friends. We've spoken about a lot of subsets of the digital asset ecosystem today. And as just mentioned, a lot of alternative asset investment strategies pertaining to commodities, to collectibles, to mining. With respect to everyone here right now, you all kind of come from a hedge fund and VC background, aside from, various entrepreneurial activities you've all underwent. And I think that you guys are all leaders from an investment standpoint and in building structured products to help usher in new capital, and bring kind of adoption to the digital asset ecosystem. So really excited to dive in and ask you guys a few questions on both your existing companies, projects, past experiences, perspectives on the industry. So I'll just give a quick background of everyone's past and then hand it off one by one, where I'll let you guys talk about what you're up to most recently, which I think will help get everyone kind of centered here. Because it's the last panel, just, we can stay and chat with limited time constraints. We'll try and keep it to 20 minutes. But if you guys want to stay on afterwards, answer questions from the audience, feel free. So first and foremost, sitting in beautiful Los Angeles, a little bit jealous, I got to say, we have Jeremy Gardner. Jeremy is a very early blockchain pioneer and advocate and a founder of the Blockchain Education Network, alongside both Augur, which is a cryptocurrency decentralized prediction market, and Ausum Ventures. Jeremy is a founder and general partner at Ausum Ventures, which is blockchain-focused venture fund. However, they do have a hybrid model. And I know that Jeremy's actively involved in investing into social initiatives. He's also founded the Blockchain Education Network, which was the collegiate ecosystem in the US. Ironically, Michael, our founder, launched the similar network here in Canada, and about 5-6 years ago worked with Jeremy to link the two collegiate ecosystems together and really foster that next wave of blockchain entrepreneurs. Jeremy is also previously an entrepreneur in residence at Blockchain Capital, where he started a legacy database security company, and also founded Distributed Magazine, which is a blockchain magazine. I happen to have a copy somewhere in my living room. I think one of the first copies, which is pretty cool. It sits there. Jerry, you should maybe turn that into an NFT. It would be kind of cool. Outside of the blockchain space, as I mentioned, Jeremy's really involved in social impact. He's a board member at Unsung, which is a food waste and hunger fighting nonprofit startup. Next, we have Nick Birnbaum, who's a partner and senior analyst at Alpha Sigma Capital, where he leads the research team. He's dedicated and detail-oriented entrepreneur with a diverse background in finance, and prior to that in film. Before joining Alpha Sigma Capital, Nick worked for Prudential Financial, where he developed key financial relationships with various stakeholders and business owners to help them assess and understand their financial goals. He also passed his Series 7 and Series 66 licensing exams. Our firm works really closely with Alpha Sigma Capital on a number of structured products to date. Earlier, Nick, in the film space, ran a media production business for 5 years, where he oversaw the scheduling and production of commercial and documentary projects for Fortune 500 companies, both regionally and globally. And his experience in financial services has really helped shape a unique perspective. I read Nick's research on a bi-weekly basis. He's given me a lot of great insights into the digital asset space. And I know that I speak on behalf of a lot of his thousands of readership when I say that his commentary has been spot on 2 years running. So thank you, Nick. Finally, we have James Haft, who's been at the forefront of global emerging markets. Merchant banking and investment banking is his career prior to blockchain, and venture capital, with over 30-year track record of success. He was focused on generating product market fit, biz dev, and liquidity strategies for early stage disruptors and investors. More recently, James has been exploring leveraging legacy markets to democratize liquidity of tokenized assets, platforms, and currencies. He's also built a lot of community initiatives, such as Blockchain Monday in New York that I first met him at. And he's been an advisor to over 100 venture-backed and blockchain-based entities. Today is the founder of PAL Capital, which is an advisory and VC firm focused on distributed ledger technology. So, I wanted to kind of position everyone there so the rest of the participants know who we're chatting with. I would love if, starting with James, you guys can give a 15, 20-second overview of, the firms you guys are currently working with most actively in the blockchain space and, what your missions are there. You're on mute, James.
When I founded Crypto Oracle and Crypto Mondays, 5 years ago, my target was to try and treat this as an emerging market and see if we could follow through the typical capital markets paths that investors participate in and entrepreneurs participate in to create liquidity and to get mass adoption. So I've been looking to create the access to investors with a perpetual liquidity where I have long-term capital, so I don't have to match my opportunities against the opportunity, the liquidity needs of the investors. And as of this morning, David Johnston, my partner, and I merged our operations into a public company in Norway, which was called Element ASA. And as of today, it's called DLT ASA. And we're publicly listed in Norway. We have a market cap around $75 million. We have a portfolio of 15 investments, and we have about 11 megawatts of mining operations.
It's really exciting. And, as a disclaimer, I'm an early investor in the project and really excited to see your growth. Before I hand it off to Nick and Jer, James, I'd be curious for you to elaborate a little bit on the thought process behind listing on the Norwegian Stock Exchange and what the experience was like versus, your investment banking experience in North America listings.
Well, I started out in Asia listing companies. I listed the first company in China on the New York Stock Exchange. And then I went through Latin America and Russia before I started focusing on digital companies that digitize information as an emerging market. And through all those markets, you had to tokenize the businesses to make them acceptable to the whole market. So if China, when we did the first company in China, it was a motorcycle company. It was owned by the Chinese military. And it was illegal for U.S. individuals to own assets in China. And it was also illegal for U.S. investors to own Chinese assets in the United States. So we took the assets, the ownership of the companies, and we put them into a BVI holding company, and we then took that company public through a global GDR, through a depository receipt. So basically, I tokenized the asset in China into a palatable asset in the BVI, and then took it public on the U.S. markets. And we're doing the same thing here. The assets which are underlying our company, are all legal and compliant, but they'd be hard for an individual to buy unless they understood, wallets and keys and security, et cetera. And they'd have to understand Bitcoin mining. And instead, we've packaged that into a simple form where they can buy it, they can read about it, learn with us, and buy it on a daily basis by typing in 3 letters. In choosing Norway as opposed to the United States is unfortunately creating a very opaque market for the legal and tax and jurisdictional regulations relating to digital assets. And so it's very confusing and difficult for participants in the United States. Many offerings actually exclude US participants for exactly that reason, so they don't taint their own offering. So we found by going to Norway, my company is more than 50% owned by Norwegians, so I'm no longer a US company, and I'm able to participate globally, and I don't have to worry about the US jurisdiction.
Awesome. Thanks for sharing that. Jeremy, why don't you give some insight into what you're focused on today?
Oh man, I'm focused into all the things. Ausum, as you stated, is focused on the intersection of blockchain technology and social impact. Take a very broad view of what social impact means. I would call a company like Uber a social impact company. We hold assets ranging from like Bitcoin and Filecoin to a platform called an investment in a platform called the Giving Block, which allows the donors reap all the tax benefits. Another platform called Proof of Impact, that is an impact marketplace, creates tokenized securities for, let's say, like a solar installation in Nigeria. You buy security tokens in that installation, it starts turning a profit. You get a tax write-off, but let's say somebody wants to buy your tokens, you can still turn a profit on that investment. Also launching a psychedelic fund, totally unrelated. Made Man is my men's skincare startup, which I'm focusing a lot of my energy on. But really, my ventures run the gamut. I think I try to be 2 steps ahead of the curve. 2.5 years ago. Super excited to be helping you guys out and working with several other startups and artists and creators to really create a very broadly applicable use case for blockchain technology.
Awesome. Thank you. Nick, why don't you share some insight into your role at ASC and some of your guys' core focuses today?
Thanks, Zach. I'm the head of research here at ASC. Currently, we're focusing on a number of different initiatives. We have a joint initiative actually with GDA where we're creating an algorithmic quant fund that trades Bitcoin. It's a mean reversion strategy. We also are focused on the public markets and the future that has for blockchain companies. We see the Coinbase listing as a Netscape moment, if you would. And we're very interested in what that opportunity offers for blockchain companies to go public, as well as for traditional investments in stocks that now are focused on blockchain technology and not necessarily owning tokens. So we're looking forward to that. Lots of people are going to be putting in SPACs, and there seems to be new news about a valuation every day. So we look at that stuff.
Awesome. And with respect to that recently launched fund, how do you think these sort of managed strategies on, Bitcoin and digital assets, will provide competitive asset class exposure? Who's the target you're trying to service?
I think for some of these digital assets, they're very volatile and people are aware of that volatility. Certain products, structured products like the Pegasus Fund, they allow investors to reduce that risk through our mean reversion strategy. But it's a more palatable way for them to enter. As James had alluded to, most investors aren't aware about wallets and keys, much less it's very stressful for them to have to manage that, nor do they want to. So products like this allow an easy way for investors to get additional access to Bitcoin without owning Bitcoin necessarily.
Awesome. So, I'm curious, Jeremy, you mentioned that aside from, having the gamut of things and really having a variety of different, projects, what got you first excited about digital assets? Are the reasons you initially entered the market still exciting to you today, or do you think the industry has shifted a little bit? I'm curious kind of, on the entrance framework and then what your perspectives are today.
Well, my evolution, you have to understand it anachronistically.
There's a bit of a
2014, when I first began to understand that's really there was server. Now,
Jer, your connection's not great. I'll give you a minute.
How about now?
Yeah, that's better.
Okay, so when I first got into this space, it was really only Bitcoin. The term blockchain technology wasn't out there. Crypto assets was years away from really being alternative blockchains, but they didn't really provide something particularly new. It was only with the innovation that Ethereum brought that we really saw another wave of blockchain innovation. So when I first got excited about blockchain technology, I got excited about, enabling people to be their own banks, to do what Bitcoin, to be this global kind of monetary system for remittances and payments. And yeah, I mean, I think my hope for this technology has definitely deviated, or better said, evolved since, early 2014. But, I've come in at various stages of tokenization. I created the first utility token with Augur, on top of Ethereum, did the very first ICO on top of Ethereum, helped create the very first security token ever at Blockchain Capital, the BCAP token, creating a tokenized venture fund. And then in, I want to say 2018, CryptoKitties came about. The first NFT conference was announced. I went to Hong Kong and decided to learn, what are these NFTs? And the second I saw NFTs, I was like, this is a massive opportunity. This is how we reach mass adoption. And when I say mass adoption, I mean like everyone and their parents owning crypto, because it was this way for people to extract the value of digital scarcity that Bitcoin brought to the world without the problems or the regulatory issues that most crypto assets present. And that was incredibly compelling because there were applications that ranged from art to esports to collectibles, to broader casual gaming. And I just got so excited because I finally found a use case for blockchain technology that really required very little explanation. Hey, here's a digital trading card. So yes, my views evolved, but I'd say my thesis around crypto assets and blockchain technology, the notion of scarcity and provable value, it has been very consistent over the years.
Awesome. Thanks so much. So Nick, I guess I have a question for you. I think that, partial to even Jeremy's points about collectibles and NFTs, which do fit under the category of alternative investment opportunities. What place do you think alts have today in a modern portfolio? And more specifically, how do you look at the risk profile of alts, from a risk return perspective?
Great question, especially since it's so nascent that valuing NFTs, the individual NFTs themselves, is very, very difficult. It's almost like you got to just taste the wind and kind of see. So what we have actually been doing is looking at more about the companies that produce these platforms for artists to launch NFTs, or Audius, for example, a platform where it's a decentralized Spotify is a very simple way to explain it. So platforms like that give rise to NFTs and these collectibles. It's very difficult to put value on the collectible itself. I know that there's also a digital land rush. So like Decentraland, where this is taking place, I know that people have been buying up land, and I do know that other funds have actually been buying plots of land in Decentraland and both Axie Infinity.
So we have, my company owns one of the largest portfolios of metaverse property in the world right now. We're in 7-digit portfolio and continuing to grow. And I think that the scarcity, it would be almost impossible to replicate today due to the scarcity component. And, another interesting category that we're excited about.
Yes, and I agree. I think it's really interesting. And we just haven't taken that dive for us, because from a valuation perspective, it's hard for us to put an exact value on it and then determine the amount of risk we're taking on. So we just took an approach that's more aligned with our value-driven approach.
And to that effect, what are some risk-off approaches you use to, decrease the risk in these alternative investments? Or what sectors are you guys looking at that specifically you feel more comfortable with? Is it valuation metrics? Is it proprietary research?
Yeah, some of it's valuation metrics, and it is a little tough to look at it now after, things and everybody's been hyping everything. You have to have a little more of a discerning eye in a way to see what's the value differentiation of the platform, what is the adoption like, stuff like that, because some of these companies are still very early that traditional valuation metrics don't fit necessarily. So some of that is we're kind of actually figuring that out as we go. We test our theories and then we come back to the drawing board sometimes.
Got it. Thank you so much. So, James, I guess I'll pose you the same question about how you see alts fitting into the modern portfolio.
I think it's really early in the market formation. Having looked at emerging markets over the last 30 years forming, around the world through countries and then through the digitization of information and how that ripped through the world for the last 25 years. We're super early, and people tend to think that you're much further ahead than you are, and they think that they've FOMO, that they've missed the opportunity. The reality is the NFT market hasn't even started, and what an NFT is and what it's going to do hasn't even been discovered yet. The stuff that's coming out now is the gee whiz, look what I did. Somebody's going to buy it stuff. At the end of the day, it's going to be anecdotal stuff that has nothing to do with how NFTs are used in the future. So I think that alts are kind of in the same spot, right? I mean, does anyone really understand the difference between the 17 different, spin-offs of Uniswap that they're investing in? And do they really understand what the difference is between SushiSwap and Avalanche and Polkadot, right? I don't think so. And so, I think what you have right now is the early formation period where the attraction of big gains is a big gold rush where people are going out there and taking bets. But the truth is the size of the market that's chasing those opportunities in terms of the global capital markets and the global wealth is infinitesimally, unfindable. It's so small. Right. And so what we in the industry think, wow, it's happening and it's going around and so many people investing. This is mass adoption, and we're not even close.
You know what? We're surrounded by it on a social level. All of us are friends and colleagues.
We're in a bubble. We're in a bubble, Zach.
There is still surprises me where I'll meet like a stranger. I'll be introducing myself, or a girl or something, and I'll tell her I work in the cryptocurrency space, and she'll ask me what's cryptocurrency, and I'll be like, "Have you heard of Bitcoin?" And she doesn't even know what Bitcoin is, or
right.
It still happens to me a few times a month.
Let me push back a little, because how many I don't know about, I know a lot of you guys are in Canada, but in the US at least, a lot of people don't own stocks. Like, stocks are not broadly owned, or real estate are not broadly owned. We're reaching an inflection point with crypto assets where fundamentally the number of people owning either Bitcoin or Ether or an NFT, a crypto kitty, like a piece of art, we're reaching that inflection point where it's getting to be on par with stock ownership. Coinbase is more valuable than most stock trading platforms. Like, this is, you can say we're early, and I think we are in terms of the potential of blockchain technology and crypto assets. But at the same time, awareness among consumers, your average Joe investor is incredibly high. Amongst institutional investors is incredibly high relative to other investment classes. And so you can't downplay that.
I don't think that, I'll push back a little bit on that. I don't think that's factually accurate. I think there's a lot more people that own stocks than own Bitcoin. And I think, like, I'm up in Vermont right now, and I'm in a community of about 200 people up here, been quarantined for a year. And we've actually formed a nice little community up here. And it's interesting that I basically went from a group that had almost zero adoption of Bitcoin to that was about 10 people who follow me and 3 people who invested in my company, right? Just because they want to see what this new thing is and they're reading about it, but they didn't understand how to get there. And I just think that, if you look at the chart of how Amazon came about. So Amazon, in the 1995 to 1997, it used to go from 0 to 100 to 0. It's going to go bankrupt. It's going to be the biggest company in the world. It's going to go bankrupt. It was back and forth, back and forth. But if you look at the chart of the value of Amazon 5, 6, 7 years into its life, and you look today, you realize that those swings, which seem so big, like 50,000 to 30,000 to 50,000, seem like they're so huge. Now, when you look at Amazon, the chart goes like this, and it goes like this, and those days that seem like they were earth-shattering in 1999, they don't even show up on the chart, right? They're not even a vibration. So I think that's where we are.
Your anecdote is cute, but going back to empirical evidence, more than 100 million users exist on Coinbase.com. That is not a small portion of the human population. Like we're talking about actually mass adoption. Like whether or not you know everyone owns Bitcoin or is using blockchain technology, that's an entirely different discussion. It's a matter of scale. Like I think far more people are going to be using crypto assets and owning crypto assets than will ever own stocks in companies. Like that, and that's the trajectory we're headed on. But when we're looking at, in comparison to traditional assets and like consumer acclimation to asset investing, we're reaching parity very quickly. It's not that we're on par with stock ownership. Bitcoin was invented just over 10 years ago. Stocks have existed for hundreds of years. So it's a matter of scale, but you can't diminish the level of adoption that we've achieved. And look, that Coinbase number is just boggles the mind.
Well, it's wrong, but that's okay. They have 43 million users.
So there's 100 million. So there's about 100 million people who have owned cryptocurrency or transact in the cryptocurrency ecosystem. And it's okay. I think that listen,
I agree with you. It's growing fast, and I'm a total bull. But I also think that humans tend to, we just tend to overestimate in the short run where we are, and we underestimate in the long run where it's going to get. And so I just think we're in that cycle right now where there's a buzz and things are happening. But I think that, like NFTs, you look at them, they're going to be so much, and altcoins, they're going to be so much more interesting for the data they carry and for the transactions that they enable, much more than how much they are interesting as a financial asset to invest in, right? People right now look at tokens as being for investment and like it's a stock market. But the reality is, I think the interesting thing about tokenization is the ability to do more interesting transactions with less friction with more people in a different regulatory environment. And that's not really about the value of the token in dollars as much as how it changes your life. And I think that those changes are second, third, and fourth level that we haven't even started to explore yet.
So I listen, I tend to agree with both sides. I think that number one, $100 million who have entered the cryptocurrency ecosystem, digital asset ecosystem, is not insignificant. It does represent, let's call it above 1% of the global population. Obviously, this is low on an adoption standpoint, but it is significant enough when you consider, the kind of what it needs for an asset class to be considered successful. $1 trillion market cap is no longer 200 billion. I think it's small in the sense that right now there's only 3 of the global 2000 top companies that hold Bitcoin on their balance sheet as part of the corporate treasury. So that means, and there's only 1 company in the S&P 500, which is Tesla. These numbers in that sense are still very small, because if we've seen already—
how many own gold? I don't know the answer to that question, but do a huge amount of S&P 500 companies own gold in their treasuries?
No.
So that's what I'm saying, is you have to take a relativistic point of view here. We as a group, this is, once again, we're suffering from groupthink. We know blockchain technology, when it comes to the value, transfer of value, can do just about anything that we could want it to do. So the applications are limitless, and in that sense, it's the adoption is infinitesimally small. But in the sense of where like stock ownership by your average consumer is, by adoption of real conversations as a treasury asset by national banks, government corporations.
I agree that it is being, Jerry, I agree. I think it's being considered widely by all these groups. And I think James's point was more not about at par to stock ownership and investments and, interest. It has more to do with, I think, what he was talking about, where the future is headed, where we can't even predict what the next version and iteration of NFTs is, or, how these tertiary layers are. We understand the infrastructures and protocols. I think that a point was made earlier today, which is interesting, that in the early stages of the internet, there was no vehicle by which people could actively invest into the internet's protocol and infrastructure. That didn't exist. Today, through token issuance, we are able to. So we've seen more investors, like, who wants to truly understand all of the underlying technology unless there happens to be some monetary upside. I could ask you guys on the panel who happen to be, very intelligent, involved with technology. Can you guys describe to me how the internet works? Despite using it every day, whether you can or can't, 99% of people cannot. So, there is a vested interest to learn at an early stage, and it's creating engaging and thoughtful conversations. Speculation is, whether I think that it's beneficial to get people into the ecosystem, whether they're using cryptocurrency as a hedge or for, novel technology or improvement, that does help the kind of ongoing growth of the industry.
So Zach, I agree with you completely, and I think, Jeremy, I think that you've been involved with part of the democratization that I'm talking about. It's because it's not with the internet. The TCP/IP was, that was important. HTTP, that was important. You couldn't have anything without it, but nobody understood how it worked, and it wasn't about the technology that made the internet popular. It's the apps, right? It's the killer apps that draw the usage through the technology. So the difference this time around is the public is actually investing in the base layers, even though they don't understand them, and even though that's not what's going to make it popular to the masses. People are participating, which is democratization, and fantastic. And I love that about this economy. But it's things like Augur, right? It's those things which people can actually touch and use and find cool, which that's where the growth is. That's where the mass adoption is. That's where the beauty of this is. I'm invested right now in a company called Vivi. Right? These guys have the digital licensed rights to DC Comics, to Paramount, to Ghostbusters, to a bunch of the Asian content bases. The same guys that popularized Pokemon and Yu-Gi-Oh! They're the ones that took Pokemon from Japan and brought it global. And now what they're doing is the same thing on an AR, VR app. Now it is tokenized. There is a token behind it called the OMI that's gone up 1,000 times that people have invested in and are doing amazing and love it. Has 80,000 followers right now on the app. The app hasn't even launched out of beta yet. Okay, they're just getting started. When they launch, they have Batman, they have Ghostbusters, they have hundreds of millions of built-in users that are fans, that are gonna be drawn to this, that are gonna be playing with these digital assets, that are not gonna know that it's an NFT, but it is, right? And it's actually gonna be able to be transported from the Vivi platform into metaverses, where you can start to use these as your avatars or your play companions within the metaverses as NFTs, but people don't even know it yet. Right, and to me, that's where the mass adoption comes from, and that's where the beauty of this all comes. That's where we start really sharing the love in terms of the mass adoption.
James is exactly right. I mean, look, we don't care where Amazon is hosted or where a website is hosted, and we don't think of Spotify or Uber as internet applications. We just think of them as apps we use on our phone. Blockchains at their best are totally obfuscated from the consumer experience. You know the value you're getting from it. You know that that you can now know for certain that like Batman digital collectible is one of one. You know that, but you don't even know anything about the blockchain it's built on, about the issuance, about how NFTs work. And that's right, and that's the direction that we're headed. That's what's so exciting about NFTs fundamentally, but really exciting about any application of blockchain technology. Sure, yes, you can invest at the earliest stages of the protocol level development and really profit from protocols that flourish in this new blockchain world. But what's most exciting is when consumers are benefiting from blockchain technology without knowing they're using blockchain technology. So we're
exactly. And it won't be popular until that's the fact, right? Because if you had to know how your car worked, right, you'd never be able to drive.
That's for sure.
Exactly.
Great. Thanks, guys. I always, encourage and love the discussion. I didn't want to stop it. So I think just for timing perspective, again, technically we are over time, but we are the last panel. So maybe I will start with one more question, then open up the floor to attendees to ask anything if they're still around. Would highly encourage it, and you guys stay around as long as you can. But we'll try and wind it down in the next 5 minutes. So what's a good last question here? I think from my perspective, I did ask this earlier, but I think it's relevant to what we were just talking about, and I'd love to hear your perspectives on it. If you were to kind of liken cryptocurrency industry right now to a game of baseball, what inning would you say we're in, and why? And I think that it just kind of will allow you guys to synthesize your points on what you were talking about, and kind of bring it home. And specifically, feel free to talk about different aspects. I know that protocols is in a different stage than NFTs is in a different stage than social applications. So would just love to hear your open opinions on it. Nick, why don't you take it away?
Yeah, I'll start, I guess. On what they're saying, I agree. We're still early. I think that it's kind of ironic. Blockchain's biggest hurdle to adoption is the fact that it has to continually explain itself and be like the star of the show, whereas really it needs to be running the stuff in the back, as they've mentioned, and consumers could care less. They just want, the killer app. So I'd say we're early. What inning exactly? Not sure, but it's still early.
Great.
So I'll jump in. Honestly, I think we're still in Cooperstown, creating the rules. Blockchain is successful as the first example of what happens when the technology works, when the philosophy makes sense, and when enough people use it to get mass adoption, right? So that's fantastic as an example, but it's not the be all or end all. It's just the one that got there first and launched out. In emerging markets, that position is a very important position, and it's hard to knock that company or that concept off its roost as number one, but we'll see what happens. I think that, Ethereum coming along and Ethereum competitors, and then going into these other aspects, I really think that we're still defining the rules. I still think that people don't really understand how this is going to happen and how this is going to change us. It's going to change politics. It's going to change society. It's going to change education. It's going to change the economy. It's going to change religion. The whole idea of truth without trusting, and the ability to go with the intelligence of the crowd who you can trust, instead of the quote unquote experts who have conflicting interests against yours. And this move towards decentralization, I think it's going to eat the world. And I think that we're really just at the beginning. And what we have right now is the existing powers holding on with their fingernails, trying to stop it, because they don't know how they're going to tax. They don't know how they're going to control. They don't know how they're going to predict.
So James, let me just ask you quickly. I see the long term there, and what today, let's call it 2021, do you think are the best products, instruments, or fund alternatives that can give asset class exposure and help take us to the next level? And I just personally, my belief is that if you can usher in capital, by nature, capital talent follows capital. So if we can build these products as leaders in the space, be it through venture, through investment, once talent comes, we inevitably get into development. Development leads to adoption, to innovation, and innovation leads to adoption. So let's focus on that first part for a moment.
I think the first thing is Bitcoin. I do think that, if you want to get your toe wet and you want to figure out what's going on, I find you don't understand something until you're at risk, right? So you gotta get your toe in. You gotta put some money down on the table so you start paying attention. And so I think Bitcoin is the base layer. It's the widest adoption. It's the most liquid, and so I find that is a good place to start. And then I think people should follow their passion. I think if they collect art, they could look at NFTs. If they're really into communities, they could start looking at the social media networks. I'm a big believer that you excel at the things that you're passionate about. And so find things that you're interested in and follow them, and find people that you find interesting and follow them. And that's really the route to try and figure it. And I don't think there's any one answer for everybody. I think it's really, about following your passions.
Awesome. Jer, how about you?
I'll be as poetic as I can be. I mean, I think we're in the early innings of a game where the rules, yes, are not fully written yet, but the game is being played and runs have been scored, and a sense of momentum has been established. You know, what we're doing is very real and it's not going away. And yet, not everything's been figured out yet. I think, you know, it will take decades to fully understand the potential impact.
It goes in waves like anything too, right? You know, it's not gonna always be a straight line.
Yeah, it's a zigzag, and we're really feeling it out. But you know, really, runs have been scored. We something very meaningful has been established. And you know, when I came into this space, it was unclear whether Bitcoin would exist, you know, a few years from then.
I think until a year ago, anyone could have argued otherwise. I mean, personally, despite having worked in the space for 4 years, during the, about a year and a week ago today, when the market hit its bottom with the crash, you know, I was looking at the order books and I was really seconds away from selling coins I've been holding on to for a few years. There's about $20 million left on the order book between 0 and 3,500. But today I would agree that I think we are, almost too big to fail. We've seen Jerome Powell allude to it, as a recent and notable figure to do so. I think that, you know, we've hit that critical mass where it would be hard pressed to, wipe us away.
No,
I thought it was funny last March when you're talking about when Bitcoin went down to like 4,000 or 5,000 and people were panicking. I'm thinking to myself, if you liked it at 15,000, how can you not love it at 4,000? I mean, it's like the only asset that the more it goes up, more people want it.
It's different when you see that drop in 5 seconds and you're looking at literally, you can see the bottom of the order book. It's, but I didn't sell and I did buy. So I agree with you, but I was sweating.
Yeah, I took the run, but yeah, we've reached the point of no return. Where we are will only be determined 100 years from now. But the ball is rolling, and there's a lot of good to come.
Awesome.
Thanks for having me.
No problem, Jared. Thank you. So let's see if we have any questions from the audience. What is the panelists' view of the Top Shot Sports NFT? Do either of you want to take that?
Go for it, Nick.
I actually personally own some of those. I got involved with a bunch of these NFT platforms early on, and sometimes the best way to play around with them is to actually, use them. So I collected them, and actually I played around on CryptoKitties a bunch too. So because I used all these flow products, they gave me a bunch of NBA Top Shots. I'm not a big basketball fan, but I actually think that they're really cool. They have a really great use case for tons of sports, not just the NBA, football, but soccer is the most popular sport in the world. And so I think that there's tons of opportunity there. I know that MotoGP is licensing, motorcycle stuff. And so they have a bunch of licensed motorcycle stuff. They also have licensed F1 racing games with the NFTs where you own the car and the driver. So I think these things have a lot of potential, and they're some of these killer apps that will bring a lot of mass adoption.
Awesome, thanks. James, someone in the audience asked for you to tell them a little bit more about DLT ASA.
Sure. That's a nice slow ball down the middle. DLT ASA is the company which was actually named today. It's the renaming of a company that was called Element ASA on the Norwegian exchange. Element for the last year and a half has been in the business of owning digital assets, and the board decided that they wanted to get more involved in digital assets. So my partner, David Johnston, and I had a group of assets which included interest in some Bitcoin mining, and a portfolio of about 15 companies that David, who's one of the legends in the space, had formed. And we contributed that portfolio into Element and have now issued about 60% of the stock is now owned by new shareholders who contributed around $20 million of assets, which are, we believe, severely undervalued at the market. So we think there's upside in the stock. And we think that what we want to be is the easiest way for individual retail and institutional investors to have a part of their portfolio represent the new digital economy without having to actually understand the underlying. They can follow us and our team. We'll make our site into an educational site. We'll make the experience of being with us one where you can learn and see. And as we put forward a portfolio, which will be transparent and which will represent the best of the platforms, protocols, exchanges, and wallets that we think are going to form the basis of the new digital economy. So the idea is to be a cash flowing entity from Bitcoin mining and to reinvest in a wide portfolio of the exciting new digital platforms based on blockchain and distributed ledger, and to present that in the easiest case in a liquid form to retail and institutional investors globally.
Awesome. Thank you so much, James. I think we got to end it off here, guys. We are, over time, and I have a few things I need to attend to as well. Thank you so much.
Our ticker symbol in Oslo is DLTX.
I was going to say, James, I encourage you to leave a note in the chat with the information on your ticker and on the company and information to reach you, as well as Nick. I can provide that for Jeremy as well, in case any of you guys want to get in touch with him and learn about his ventures. As always, I encourage you guys to reach out to zach@gda.capital if you have any questions on some of the panels I hosted today, or in general, looking to connect to someone that participated in our conference. Thank you all for attending day one. We really got a wide-ranging, span of different participants talking about alternative assets, mining, family offices' approach to the digital asset space. Specifically looked at the sector of NFTs really heavily and publicly traded vehicles. Tomorrow, actually in about 7 hours at 11 p.m. Eastern, we'll be kicking off day 2 of the conference, which will be targeted to the APAC region. Although it is late, I imagine if some of you are attending now, that content will all be online. We're being joined by about 8 family offices speaking on different approaches to the sector itself. So I think that will be some really engaging and educational content. And the YouTube link will be shared to everyone after the conference, so you'll be able to have that in your inbox. So thank you everyone for joining. Thanks again to James and Nick for this last panel and the engaging discussion.
Thank you always. GDA is fantastic. We love you guys.